Hello everyone. As in last video, we have already discussed complete BSS industry. How is the time growing? How is the revenue and everything is growing? How is the demand and supply mismatch is currently in BSS industry? Then we have also discussed its value chain. So in this video, we are going to cover a company from BSS industry. So if you want to understand this video completely, I will suggest you to watch the last video to understand it very well. So let's start with the video. The company name is Solar World Energy. It is listed very soon. So in this video, we will start with business update, then discuss about future plan, then we'll discuss valuation and then outlook. So let's start with the business update. So currently the Q4 result is not out, so we will discuss it based on the Q3 result. In Q3, the company's around revenue grew 184% and the PAT was flat because of some issues we will discuss in this video. So if let's talk about its vertical. Currently, the company has two vertical. Company is mainly in EPC business, and it will be EPC business, despite doing that much capex. So we will talk about these two. So currently, if you see, it has two vertical. One is solar EPC, and second is BSS EPC. So currently, solar EPC contributes 77% of revenue, and BSS EPC contribute 23% of revenue. But if you talk about solar EPC is currently stable, but there are some challenges which we cannot ignore. Like there are some issues with the grid connectivity, transmission slice. We are seeing this for many quarters, and currently management has been accepted that these are some issues which are impacting their execution. And there is also very competition in this industry. As in last year, their solar EPC margin was 15 to 16%, but this year they are guiding for 10 to 11%. Although last year they have did some margin favorable works, but still that you cannot gain 5 to 6% on the project basis. So there are some margin pressure. It's quite visible. And if we talk about BSS industry, BSS is in early phase and they have acquired quite a good experience doing in BSS project. And if you see the last 4 to 5 order the company received, majority are from BSS industry. So they are quite doing good in BSS industry, and they are currently doing EPC business. They don't have capacity for battery pack development or containerized solution. So they are currently EPC business. But if you see about current BSS industry, their margin is around 10 to 11%, and they are setting up a fact for containerized solution, and they are doing backward integration to protect their margin and increase their margin and make the BSS industry sustainable. So current margin is around 10% something, plus minus 1%, and they are adding a new capacity of 3.5 gigawatt to manufacture containerized solution in-house. What is containerized solution? When you pack battery in a container and make it a plug and play device. So it is called containerized solution. It is around 5 to 4.54 megawatt a container. So this is containerized solution. If you want to know about more, you can see the last video. So they are doing backward integration to control and increase their margin. And management has guided that after the capacity, which is going to live in March end. So they are guiding that after this, their margin in BSS industry can increase significantly. Now, if we talk about solar EPC business, in solar EPC, they are doing backward integration too. Their capacity of solar module started in December 2025, which was ready since June 2025, but because of the ALMM certification delay, they could not start their capacity. That is why if we see their last 5 to 6 months, I mean last 2 quarters, their standalone PAT was more than their consolidated PAT because they have already investing that much in capital expenditure, and also their capacity has been started for depreciation cost. That is why their last year FY25 PAT is lower than currently FY26. So this was some issues in the business, and in FY27, if you see, all the issues will be resolved. So that is why the company is looking good. And if we talk about we have already discussed module manufacturing. If we talk about capacity in module manufacturing, it is around 1.552 gigawatt, and the management has guided for PAT of 70 to 80 crore for FY27. I mean, if we calculate from our end and seeing the industry number, so management is guiding 5 to 6% PAT margin for module manufacturing. And we have already discussed in our first video what is happening in solar industry. So you can clearly see that PAT margin in modern manufacturing, which was around mm, 10 to 12, 15%, has come reduced to 5 to 6%, 7%. And that is why management is saying that, and they are also doing capex for cell manufacturing, which is management has guided for June 2026 for coming live. And it can lead to your margin expansion to around 10 to 11 or 12%, maybe or more. So we will get more info in Q4 result and earning call. And their solar cell capacity is around 1.2 gigawatt. Mean their module manufacturing which run on 70 to 80% efficiency, and cell runs on 80 to 90%. In their despite the disparity in number, their cell and module capacity is around same. Their solar module capacity is latest technology based G12R top one. That also shows a good sign from management. So, and also they are doing a junction box capacity which is used in solar module. Mean they are doing like pretty good in their backward integration. That is why their correct margin, which is around 9% consolidated basis because of some losses. And if we see the EPC, if we see the standalone basis, which is currently around 10 to 11%. So if we try to find out the F27 margin, it is going to be quite good. Their margin, which is around 9% something, it is going to increase 12 or maybe more percentage because of their solar cell and solar module lines and BSS in-house development. So these are the quite good for FY27. That is why the company is looking good. I think we have covered everything related to operational performance. So in future plan, they are targeting for maybe entry in IPP, independent power producer. Management is like quite serious about it and they are evaluating, but let's see what their decision is. They are planning to enter in IPP project. Also, if we talk about management view about business, so management clearly and very articulately said that they will be a EPC business. Despite doing that much capex, they are doing that much capex to sustain their EPC business. They are doing their most of the capex to like seeing that they can consume 60-70% or even more in their own business. That is why they are doing capex. Like they don't want to be a company like Vari Energy where they do everything, but they are in manufacturing process. But the company management is clear that they want to be a EPC business, but in-house capability, so that their margin will be protected, their business will be sustainable. That is why the management quality is looking good. But there are some issues still with management quality. They have quite a good experience in EPC business, and if we like hear them, they sound quite confident, but there are some issues related to their manufacturing capability, because they clearly, if you see the last 2 to 3 guidance, they have already missed their 2 to 3 guidance in last only 2 quarters related to their manufacturing capability. They initially targeted that their manufacturing capacity of solar module will be live in January 2026, but sorry, they have initially targeted that their BSS capacity of 3.5 gigawatt will be commissioned in January 2026, but in recent con call, they guided for March 2026. But today, if you see, it is 2nd May, and there is no update from management regarding the operationalize of BSS and junction box capacity. So this is quite serious issue regarding management. Also, they have guided for like cell capacity live around March 2026, but now they have pushed to June 2026. But seeing the capability, I cannot be sure that they can operationalize their capacity in June 2026. I am considering it to go to around December 2026 or maybe October, November in 3rd quarter mainly. And you can assume that their capacity will go live in June 20, sorry, you can assume that their capacity will go live in Q3. So maybe its impact will, we can say, in next year in FY28. But seeing this is a issue with management, that they are very optimistic, and that is why their manufacturing capability and their guidance they have missed many times. So I think we have covered everything related to future plan. So now let's move to the valuation. The company is around trading at 16 to 1700 crore market cap, and they have guided for around 1500 crore revenue for this year, or 1500 crore plus. So the company is currently, if you see price to sales, around 1.1. But if you see the P ratio, it is not quite a good matrix to see because of the depreciation and high capex costs. Because we have already discussed what is going on related to their PAT and EBITDA margin. So for next year, their like solar module capacity is going to contribute around 70 to 80 crore PAT in the business. Current business going to deliver around 100 crore. So the company is trading around less than 10 P for FY27 basis. So if we talk about outlook, the outlook is looking good. Why? Because the management is quite good related to their EPC capability, like cash allocation. They are pretty confident that they will be EPC business. They will not be a manufacturing business. So it is a quite big decision, and they are quite confident on their decision. So that is why I will rate a 6 to 6.5 to 7 on management capability. I am not fully satisfied with the management. Still, the management capability is looking good on EPC business, but let's see how they perform in manufacturing business. And if we talk about some issues, the issues I would say more or less say silver prices increase on model manufacturing, grid issues, and if everything they like maintain and they do backward integration on time, utilize it at optimum level, then the everything will look good and they can deliver a very good potential. But we have to be like quite open minded. If anything goes wrong, we have to change our view regarding company. So that is it for today. I think we have covered everything related to valuation. And yes, the one thing that their Q4 result is going to increase around more than 200% in Q4 because they have guidance of 1500 crore revenue plus 1500 crore plus revenue, and their current revenue is around 984 crore something. So this is going to increase a multifold to 100% or more than that. So that is it for today. We will cover some more video or some more industry analysis in next video. Thank you.